Hello and a very warm good evening, everyone. I welcome you all to this highly anticipated online webinar on equity and sectoral analysis, equity options trading with strategies, organized by Committee of Financial Market and Investor Protection ICAI. I'm truly honored to stand before you as we gather here today to delve into the intricacies of stock market trading with the insights of a highly esteemed speakers who have made remarkable contribution to the field. It is my pleasure to present our distinguished speaker, CA Sanjay Kapoor, a seasoned professional in the financial landscape with a distinguished career as a practicing chartered accountant since 30 years. Mr. Kapoor has been a driving force in the industry for several decades. He has gained his expertise in various fields such as consulting across multiple industries and domains, including accountancy, finance, economics, human resource, risk and business management, banking, law, economics, loans and advance, manufacturing services, retail and distribution, and the list goes on. He is a multifaceted professional whose journey reflects a profound commitment to excellence in the realms of finance, technology, and market innovation. Let's all join our hands together to welcome CA Sanjay Kapoor. Over to you, sir.
Thank you, ma'am. First of all, I want to thank my Guruji. He's not right now here, Mr. C.A. Charanjot Singh Nandaji and C.A. Samandi Vadvaji, and my moderator, respected ma'am C.A. Nehaji, for today's webinar, and all my fellow CA friends who are attending today's webinar, for inviting me to give my experience and views on equity and option trading with strategies. I want to make this webinar as interactive as possible. I want to request you to all please raise your queries whenever you want to feel like. I want to like it to be interactive so that we can have both learning experience for both of us. I have great passion for share market and I'm a daily option learner also. I hope everybody is not a beginner and somebody or everybody is basically into share market in some way or other way, maybe mutual fund or like that. So I can start with my, in case you say I can start with my presentation or I can do without that also. Let me share my screen. Today's topic is equity and option trading with strategies. There are different type of investment options in share market or other than FDs, like mutual fund, shares, future options, fixed deposits. It's just like a cricket match. I compare it with a cricket match. If you want to play test match, then you have to go for mutual funds. If you want to play one-day match, then go for shares. And if you want to play T20, then go for future and options. That's the only way. And every match, every form of cricket has its own benefits and things also. Whatever you like, in case you are a long-term player and want to study, don't to take risks, then go for mutual funds. Otherwise, if you are active players, you can go for shares. If you are too active, like T20 matches, you can go for future and options. I prefer shares and future options because everybody says share market is just like a gambling, but I don't think it is like a gambling. You have to be, it is just like a business, any business model. I compare it with any jewelry shop or showroom or like any jewelry shop with all the varieties of it. So I treat equity trading as a business model. Like I, unlike income tax law, GST law, where there are so many sections, so many disputes, so many legal implications, laws, and in courts and everywhere. But you will never find any sections and laws or any disputed case in equity trading. It is just like any other business model, like you are opening a shop. I always compare this with a jewelry shop. and you are always winner. And in comparison with the jewelry shop, you equity trading is always has an edge more than uh, better than a jewelry shop. I can compare it because in if you want to open a jewelry shop, you have to first buy a showroom or get it on rent, and that too at very heavy rent. Then you have to get it renovated. It has some cost. Then you have to put in some stocks and all that. Whereas in equity, you want to start the business for equity, you just it take just 10 minutes to open a demat account. It's one man show, and there is cash sale, cash purchase, no debtor, no creditors, even your no bad debts are there, and no rental is there. And it is just 5 day week, your shop, and it shop closes at 3:30, and you can operate from anywhere in the world. You don't have to sit at particular place to operate or sell or buy. Only you need is computer or mobile with good internet connections, and there's no debts and there's no tension of your stocks any stolen or pilferage. They are on demat accounts, and it is always better to do trading. I always prefer trading better than any shop or any jewelry shop or any mall or any kind of business, because it you can operate from anywhere in the world, anywhere, and your cost is as same as that. And जबकि मैं ये कहता हूँ कि ज्वेलरी शॉप में अगर किसी ने ज्वेलर ने ज्वेलरी खरीदी है, सपोज 49,000 की आज की डेट में उसकी कॉस्ट है, 49,000 से ज्वेलरी खरीदी है कल, और रेट हो जाता है ज्वेलरी का 48,000 और 47,000, और आपके पास कस्टमर आ गया है आपकी शॉप में, ज्वेलरी की शॉप में, तो ही विल सेल एट 47,000 ऑल्सो, जबकि उसकी परचेज कॉस्ट 49,000 है. Even then he cannot refuse to sell his jewelry. Whereas in equity trading, अगर आपने कोई शेयर 50 रुपए का खरीदा है, इट्स योर स्वीट वेल कि जब तक उसका 55 रुपीज रेट नहीं आएगा या मोर देन आपका प्रॉफिट नहीं होगा, यू विल नॉट सेल इट. सो इट इज ऑलवेज एज देन एनी ज्वेलरी शॉप और एनी शॉप. जबकि वहां पर आपने दुकान खोली है तो कोई भी आपके अकाउंट आएगा आपके उसमें खरीदने, तो यू हैव टू सेल हिम. Whereas in equity, it's your sweet will कि आपने बाइंग कब करनी है, सेलिंग कब करनी है, और यू हैव टू बी वेरी स्मार्ट ट्रेडर. और इसके लिए मैंने बड़ी अच्छी कई स्ट्रेटेजीज निकाली हुई हैं विच आई विल डिस्कस लेटर. और बड़ी इतनी अच्छी स्ट्रेटेजीज हैं कि यू विल इफ यू फॉलो दोज, तो दे आर ऑलमोस्ट लॉसेज आर वेरी मिनिमम, वेरी मिनिमम. मैम लोगों के क्वेश्चंस आ रहे हैं, कैन वी टेक इट राइट नाउ या फिर बाद में कर लें?
We'll take it a little later, sir, once you finish.
बीच बीच में जो आते रहेंगे वो उसका देते रहेंगे.
हाँ जी, yeah.
ठीक है. बल्कि शेयर मार्केट को मैं अगर डॉक्टर्स के साथ भी कंपेयर करूं तो आई विल टेल यू, डॉक्टर्स फॉर बिकमिंग ए डॉक्टर और इंजीनियर इट इज वेरी डिफिकल्ट टू एंटर. यू हैव टू पास नेट एग्जाम एंड ऑल, एंड आफ्टर 4 years ऑफ योर यूथ गिविंग, 4 साल लगाने के बाद डॉक्टर्स या इंजीनियर्स में यू बिकम ए क्वालिफाइड डॉक्टर. एंड आफ्टर गिविंग एटलीस्ट 1 करोड़ रुपए आपकी इन्वेस्टमेंट होगी फॉर बिकमिंग ए डॉक्टर, सिंपल एमबीबीएस डॉक्टर. And after 4 years of your youth putting in and studying hard, and आपको सैलरी कितनी मिलती है? 50,000 रुपया. Whereas in share market, it is just 10-minute job. You can enter, you can open the trading account, demat account, and start trading. And with 1 crore, and you can earn 50,000 easily if you are disciplined, regular, and systematic, and you have got good strategies. If you follow those, so I can compare कि share trading is better than even doctors and engineers. और F&O को मैं compare करता हूँ with CAs. F&O share market versus CAs, because CAs are qualified to do F&O. First of all, because it is authorized by our CA institute also, and you have become CA after if total around 100 students appear for CA exam, only 5 or 10 get pass out and become CA. Same is with F&O market. It's proven fact and data we daily get. Only 10% of trader in future and option market, they are successful. 90 are failure. same as with CA. Only 10% are successful. So we have already qualified the first thing to do the F&O trading, because we are qualified CAs and we are on the top 10 of the CA students. That's why we are CA, and same with future and options. Successful players are only 10% of 100. And you always get any business channel you open, they say, SEBI says 1 out of 10 are successful, 9 make out losses. So CA can be very good in future and options because they have already tested themselves and become CA. Out of 100, only 10 are qualified. So I always prefer CAs can do much better than F&O in F&O. And to open a trading account, you just need a demat account. And I always tell all the persons who have come to me for opening a demat account, please open the demat account who has the banking background also. Don't go just for any brokerage less. If you are getting zero brokerage or you are discount brokerage ke paas, you don't go to them because they don't have any banking experience. And if you open your account with some low brokerage who doesn't have the bank experience or banking background, your idle money lying in the trading account will not earn anything. Whereas if you have opened your demat account with the banking background, like ICICI or HDFC or Axis, you have opened a demat account with them, with banks, your idle cash will earning saving interest also. Whereas in case of non-banking brokerage firms, you will not be earning anything, idle money lying in the trading account. And that too, SEBI has come with the condition after the quarter end, amount is transferred back to original bank, idle cash, and then you have to put in again into the trading account. So I always suggest all the people and you also to don't open your demat account or don't deal with the demat broker firms who doesn't have the banking background. And and there are myths and misconceptions about the share trading also. Investing in stock is gambling, whereas it is not a gambling, it is a business model. And I have already told you and compared with any business, uh, even with the doctors and engineers, it's better business than doctors, engineer profession, or with any jewelry shop or great shop. You have got enough time for you, your family, and you can do your trading, your business anywhere in the world. And there is also misconception that stock market is for rich people. No, it is not for rich people. Even you can start trading shares with as small as 100 rupees, 1000 rupees. It doesn't need big amount. You can buy shares which are less than 100 rupees. Video struck. Not able to hear. Screen is frozen. Ma'am,
No, sir, you are audible and visible.
visible? They're
Yep.
saying. Okay.
Yep. Maybe they have their internet
Okay.
connection.
Okay. I will prefer if they ask me very good questions about equity and F&O. I will be eager to answer them. Technical hitches, please handle yourself. You need good connections to succeed. There is another myth in and misconception in share market. You have to be known to big companies, only then you can succeed. It's not there. Everything is available in net. Even disclosure are so much you can't hide anything. So it is not at all you need any good connections to be succeed in share market, or you need any extensive financial knowledge. No, even good engineers who have got good strategies and good analytical minds, they are very successful in share market. First of all, in equity investing, we have to identify our objectives. What are our short-term objectives? What are our long-term objectives? How much we need money at what interval of time? Accordingly, we have to take the results. Like there is a thumb rule of 100. If your age is suppose 30, then you and just minus it with 100, 70, it comes out to be 70. So you should aggressively play in equity 70% of your exposure. 30% should be like FDs or mutual funds or other products, financial products. So it is according to your age, how much you can take risk. This is just thumb rule. I being more than 30 or 50, I put 80% of my funds in equity and F&O only. I don't have any FD account. Even not even in mutual fund. I just tell people, if you know how to play in the share market or F&O, you will not give your cards to other person to play with it. So I never give my cards to other play, like to mutual funds. Why they should enjoy with my money? So I enjoy with my money with myself only, and I play myself only. Only who doesn't know about share market or F&O, they should go for the mutual funds. Once you know the tricks or strategies, you should always play with yourself only. And nowadays, people are so aggressive in opening demat accounts too much, and they are in share market. They ask me one question, sir, tell me one share which will double. I always tell them, right now it's only temperature. Within 3 months, it will be double. That's for sure. On a lighter side, I'll tell you my strategies, sir. What tools do you use for F&O? First, let me complete with the equity part. Then I'll go for option and trading, future and options. And again, there is strategies for investing, like safest money. You would never want to risk this money, which you want to keep for yourself, that you can put in FDs or mutual fund or liquid mutual funds. Serious money, you would like to open little bit of risk like mutual fund, and aggressive money, which you can put in shares or F&O or commodity or currency. But currency and commodity trading are not allowed for CA, so I won't prefer you to do currency trading or commodity trading. Future and options you can do and show in your balance sheet. So I would prefer CA should do future and options and equity trading. And there are some quotes like what Warren Buffett says, but you should make your own quotes, I would prefer. And people should read your quotes. Warren Buffett say, be fearful when others are greedy and be greedy when others are fearful. And there, you can't be a millionaire by investing in fixed deposits. That's for sure. Because fixed deposits cannot beat your inflation even nowadays. Your fixed deposit rates are so low and inflation is so high. Even after a year end, you will not be able to beat it inflation. Only in share market you can be wealthy. Bigger the capital, it is easier and grow. Simple सी बात है, more the shocker, the more jerks you can handle. The bigger car, bigger shockers you can handle. It can handle आराम से road पे, it can handle छोटे मोटे झटके. But cycle वाला छोटे मोटे झटके में गिर जाएगा. So bigger the capital, bigger you can handle. And yeah, this is also one of the good quotes. Money is not everything, but make sure you earn lot before speaking such nonsense thing. Money is not everything. I would say money is not everything, but you should earn so much that you can say this. And again, to be rich in stock market, you must have nazar to identify the right stock, jigger to press the button and buy that stock. Only not waiting, and sabr to hold that stock and exit when your target are achieved. If you have none of the above, you solely rely on the random cover, then stock market will dig your cover. You will enter so late, you will be in losses. I'll definitely share my strategy, which I am using for the last 7, 8 years, and I have never been in losses for the 7, 8 years. And it's very good strategy, very easy and easy to earn, easy to learn, and easy to adapt. I haven't find that strategy in any YouTube channels or anywhere. Wherever I discuss, they say this is real good strategy. I'll just share after some time. Inequity. One question is there. What we have to do as a short-term investor in time of COVID-like situation where all the shares were going down, and also my strategy will answer this question. And just wait for my strategy to come when I discuss with you. And because I am using that strategy, even 2 years before the COVID, I saw the COVID. Then after the COVID, and even in COVID period, I was not in losses, or my friends, or my whoever are investing through my suggestions. Even bad news come expertly. You can see, to build a house it takes 2 3 years, but to break a house it just take one day or a few hours only. Same is bad. You should be always prepared for unexpected news also. Like, you must have heard about in 2001 twin tower attack, and it was done by, and even terrorists were caught because lot of puts were purchased by them before 1 year, before 1 month, when the twin tower attack was handled. And even CBI agencies and were they found, because they found unnecessarily lot of puts were purchased before the Twin Tower attack, and through that angle they were able to catch the terrorist and all. So we should always be prepared for bad news, like corona virus. It came suddenly. Russia Ukraine war. Our strategy should be that it should handle all these bad news, or even Satyam Computers or Hindenburg research on Adani Group, even Paytm. Recently we got the bad news, and share cracked by 50%, more than 50%. It cracked more than 50%. And you should always accept your failures with the thing, and it should be like your failure should be like guru to you. It should not be, you should not curse on yourself or run away from the market. So investing is the greatest lessons. It's only with experience you can the learn and be the best. Your loss is the best teacher for you. Nobody can teach you unless you get the loss. In profits nobody get master. I only learned because I bear losses 10, 15 years back. And always let your family members informed about all your finances, what you're doing, and always have a nominee, because there is a lot of money lying unclaimed. If you don't have a nominee, it's very difficult to get money to your near ones. And always write a will, keep updating details whenever there is a change, and keep deposit in one branch. You keep in many branches, multiple banks, you're making way of unclaimed deposits. And always trade with one or two demat or brokers only. Because if you are having shares in one account, demat account, even you can pledge the shares and get the margins for playing in F&O, and margins are given free of cost. I just told you, always go for the nominee or always write a will, because you can see the data. 82,000 crore estimated investor wealth lying in the unclaimed accounts, and 18,000 lying in unclaimed bank accounts, more than 15,000 in insurance companies, more than 17,800 in mutual fund gullies, and more than 4,000 lying in investor education protection fund, and more than 26,000 are lying in PF. And Indian growth stories, you can have just look at this data. In January 22, there was mutual fund SIP of only 11,000. In January 2024, our monthly SIP of mutual fund is more than 18,800 crore per month SIP. So even FIIs exit, so we are less bothered because of SIP and DII is buying. Because if SIP is going into the mutual funds and they don't have any other purpose than to buy only shares only. And this is FI data since 2017. Like recently in the month of January only, they have FI have sold 43,000 crore worth of shares, whereas DI bought 35,000 of crore of. Last year, all net selling figure was 16,000 by FIs, whereas DI bought around 1,84,000. So it's FIs cannot control now our market because it's in local people only. Our market is with most of the persons is with the local market only. And you must be all knowing NSE is the world's largest derivative continuously for the last fifth year. It is the largest option trading market in the world. And these are the sins in trading, basically either equity or F&O. Series of losses will intensify fear and lead to wrong decisions. Greed. If you don't book the profit at the right time, you will always sell them in the losses. And pride, overconfidence with consecutive wins. Anger leads to impulsive decisions that makes to feel later. And too much thinking also can make your decisions wrong. Impatience also that you trade to make the profits. And trading without plan or without any strategy, it's not advisable. On a lighter note, I always say कि कोई अगर नास्तिक भी है तो इफ ही ओपन से डीमेट अकाउंट तो गीता का ज्ञान अपने आप ही हो जाता है कि क्या लेकर आए थे, क्या लेकर जाना है, खाली हाथ आए हैं, खाली हाथ जाना है. बट ऑन अ लाइटर नोट ओनली, निफ्टी हो या इंसान हो, इसने ऊपर ही जाना है. And always you should take advice from the losers and experience of the winners, and apna take your decisions and you will never be in losses. In share market, I tell you, we all are Abhimanyu. Like in Mahabharata, Abhimanyu knows how to enter the Chakravyuh, but he doesn't know how to exit it. So in share market, we have to be Arjun, not Abhimanyu, because everybody is Abhimanyu. He knows how to buy, and he doesn't know when to book the shares and book the profits, or after booking the profits, what to do with that cash. So we have to be the Arjun of our share market. Only then we will be the winner. Otherwise, Abhimanyu will lose. Always think like a Arjun. Sufficient research, smart investment, diversification of your funds. Avoid following expert advice all the time. Beware of pump and dump scheme, and understand volatility. Always take your own decisions. Keep a trading journal notebook. Always write which stocks makes you losses, what was the reason, and how to rectify it. And never be an emotional trader. Only investment that you can afford to lose, you should put that money only. Never take loan or then take the do share market. Exit. One question is there. Exiting at 20% profit should be fine if we have 70% success ratio with stop losses of 20% in 30% of cases. Sir, I'll just share my strategy. Then you will get my answer. I'm just Abito, I am just telling you general things only. I will be specific telling you how to trade and how to book profits. My strategy is stop profits, not booking of losses. No booking of losses, only stop profits. And you will be earning a lot of money with that. Now everybody is asking, so I'll tell you what is my strategy. I tell you my model of strategy. If you got, let's say, 20 lakh rupees of you, if you got 20 lakh rupees in your pocket, in your bank account, then I'll tell you my strategy. There are around 10 to 11 sectors in the market, which I have written here. There is auto sector, pharma sector, IT sector, banking sector, oil sector, FMCG sector, metals, power, hospitality, construction, engineering good sectors. And against that sectors, I have written the shares also. So my strategy is for, if you have got 20 lakh rupees, you can accordingly amend according to your need and your money. But I am telling this strategy according to, if you have got 20 lakh rupees of fund at your disposal for share market, then what will be the strategy? How to put in the money? How to trade in the money? First, write down the number of sectors. Like I have written it. You can note it down all the sectors, and against that sectors, write the large cap companies of that sector. Like in case of auto, I have written Ashok Leyland and Tata Motors. In case of pharma, you can write Cipla, Dr. Reddy's, Sun Pharma. Like in IT sector, you can write Infosys, TCS, Tata Technology. In banking, you can write as Yes Bank, SBI, HDFC, ICICI, even PSU now all running, SBI. In oil sector, you can write Indian Oil Corporation, Reliance, Gale. In FMCG, you can write ITC, Hindustan Lever. How to enter into stock properly? I'll just tell you. Just wait for another 5-10 minutes. I'm just telling the sectors first. There are around 10 to 11 sectors in the market, and I'm telling you shares of that sector. In metal, you can have SAIL, Tata Steel, and in power, NTPC, NHPC, Power Grid, Behel. In hospitality, you can go for Delta Corp, Indian Hotels. Construction, in construction, you can go for DLF, NBCC, and engineering goods, you can go for L&T and others. You can find out by just searching, Google it. In auto, what are the best shares? In pharma, what are the best shares? Just I have written just few shares just for your knowledge. Against these sectors, which are the large cap companies. So we have to first of all, we have to invest 80% of our money in large caps only. Only 20% should be in the small cap or mid cap, because you have seen old movies of you can say any Amitabh Bachchan or any old movies where you will see there are around 5 to 6 songs in the movie, whereas all 5 songs are good. Only one song is uh, which is done by Thumke Wala. You can say Nachne Wala, which is done by any not by normal heroine. It is done by Munni or so. Same here. Our out of 6, they have got 5 good songs. One is Tumke Marne Wala song. And same here. You have to put your money 80% in the large cap, 20% in small cap or mid cap only. Now, how to enter in these sectors, how to select the shares, and we don't have to miss any of the sectors because we are not in the driving seat. So we don't know which sector will move, which sector will fall. So we have to put all our money in equal amount in all the sectors. How to put in the money and how to decide it, I'll just tell you in my next slide. Now, what you have to do, any business, penny stocks are good for investments? No. Kindly share your view on the prospectus of re-rating in case of PSU banks. I'll just tell you. First, let me complete with my strategy. So, there are buying only you in any business. If you have got working capital of 3 months, then your business will never fail. Like in any jewelry or any shop, if you have got working capital for 3 months, same PNI committee say we can give loans 20% of the turnover to any person. So same is the business formula is applied here. If you have got working capital for 3 months, your business will never fail. Same with share trading also. If you have got working capital for 3 months, you have got enough money to invest for 3 months, then your business, your trading will never fail. So what you have to do, first of all, you have to write down 10 sectors, and against each sector, you have to select one share of your choice, whatever it is. So you have got 20 lakh rupees at your disposal. So in case of 10 sectors, each sector will get 2 lakh rupees, or each share of that sector will get 2 lakh rupees, 2 lakh of rupees. at to invest in that share or sector, and we cannot invest all the 2 lakh in one go. So what we have to do for having strategy for 3 month working capital, we have uh, uh, in 3 months there will be 3 month of trading means 20 trading days in a month. Because Saturday Sunday there is off, so 20 trading days in a month. So in 3 months there will be 60 trading days. So we have to divide that 2 lakh rupees by 60, which comes out to be around 3,000 per share per sector. And there are 10 sectors. So we have to put SIP of 3,000 of each share of 10 on SIP of on daily basis. And every broker provides you this facility to apply SIP on daily basis. My broker apply gives me facility. Even you don't open the demat account, your broker will buy automatically. You have to just give the instructions that you have selected these 10 sectors, and each sector is allocated 3,000 per day, and you have put in daily SIP for each share, and you have given the instructions. So computer will, even if you don't open the demat account, your broker will go and buy 30,000 worth rupees of shares per day without any your intervention, because you have given instructions to for the SIP. People go for the SIP in mutual funds for monthly SIP. I go for daily SIP, not in monthly SIP, because in daily SIP you will not miss any single opportunity of falling or rising, and your average will be the best in the market, because you are not missing any opportunity, whether share is fallen or if share has fallen. Suppose Steel Authority of India is 100 rupees worth of share, and you have got instructions for buy 3,000 worth of Steel Authority of India. It will buy 30 shares that day. In case share goes down, suppose it goes to 90, it will buy more shares. It will buy 33 shares. If in case share goes up, like 110 rupees, it will buy less shares. It will buy just 27 shares that day. So your average will be the best, because when it falls, it will buy more quantity. When it rises, it will buy less quantity, and you will always be the near to your market, and you have got enough money for 3 months to invest. So you don't have to worry for next 3 months, because you have got 20 lakh and you are investing just 30,000 per day. So your 30,000 per day multiplied by 60 comes out to be 18 lakhs. After 3 months, your money will be finished. But we have to churn this money, and we have to give this rotation for whole of your life. Your EMI of 30,000 should not stop for all your life. What you will see after 10, 15 days, some sector will rise, some sector will fall, right? So your exit policy should be clear and clearly written in black and white in front of you. After getting profit of 5 to 10%, I have to exit 70% of my demat quantity of that share. And I have to rotate 5 to 10% profit 5 to 8 times in a year. So you can see what will be your return in a year. So after 10, 15 days, you will get an opportunity to exit also, because some sectors will fall, some sectors will rise, but you have got enough money for next 3 months. So and you should not fear ki it will rise more, and why I should wait for why you should book so early, because in that day also it has bought that share also worth rupees 3,000. So it again in the next 10, 15 days, same quantity will be accumulated. You should not never have much of greed. Why I should book so early, and you have to exit your book your profit 5 to 10% depending upon how much cash is left in your demat account. And you will never you have to book your profit regularly whenever you get 5 to 10%, and you have to book, you will get opportunity what I am getting more than 5 to 8 times each year in a year. So you can multiply your 5% into 5, which comes out to be 25%. Your return will be more than 25% in a year. And apart from dividend and interest, what you have earned for cash lying in your bank account. So this is the strategy. You can apply for it, and you are not going to. I I am assured for the last 7 years it has given me profits. Any clarification on this? I started with my friend. I told this strategy to my friend. His name was, say, Neeraj Goyal. So he started this shares start falling. And he told me, "Yaar, my share is falling day by day. I'm not getting up to exit." I said, "Don't worry. Just wait for maximum 3 months. You have got enough money for 3 months to buy. You have to average out." So after 10-20 days, it start gaining, because in the falling market you have also bought that share. When it rose in a day like 8% average, it showed more than 10% the profit. Then he was reluctant to me. Yeah, tell me one more share, how to start the SIP. He started with only one share. Now he is having all the sectors in his kitty and making good money. Any questions on equity trading? I hope the persons who were asking question how to enter stock properly, they got the answers. Exiting at 20% should be fine. If no, exiting should be according to your need. In case your EMI of 30,000 should not stop. In case you are not having enough money for the next 5 days, 30,000, you can exit at 4% profit also of that share. If you have got enough money for next 2 months, you can wait for 10% profit. You can wait for 20% profit. But you have to see your EMI of daily of 30,000 should not stop. And nowadays, algo trading is also getting very popular. And everybody is after algo trading. You can say this is an algo trading because entry is automatic. It is not done by you. It is done by system. So it is semi-algo. Exit is manual. So algo is basically logic given by you, and it acts accordingly. Machine. It takes out of your emotions. I got some questions. This strategy works in all phases of market, bull, bear, consolidation. 110% it will be because in bear it is not possible that all sectors will fall. In case of Corona, my pharma was giving me good profits. I got the opportunity in the pharma shares to get the profits, and other shares also. So FMCG was giving me good profits at that time. So it is this works in all the market, bull, bear, consolidation, any phases, because you are not missing any opportunity to average it out. You are buying on daily basis. Your average is on daily basis, and that too very small quantity. And when it rises, it will give you enough profit. Is there any automation tool? Yeah, every broker give this automation tool. You just go to the broker. When you place the order, it asks you whether you want to buy on daily basis, fortnightly basis, monthly basis. Like in mutual funds, you put SIP on monthly basis. But in shares, I always suggest go for daily basis only. Put your money on daily basis so that you should not miss any opportunity. Stock to invest in sector based on government initiative announced budget like solar energy. You can go for any share. I also suggest ki go for PSU which are making good profits. Even you are not getting profit by share rising, but you will get at least 10% of your dividend, because government doesn't have any other income than to get the dividend from PSUs. So you should always enter PSUs which are in profits. You should always buy shares of PSU which are giving good profits. I, being lucky enough on the board of Indian Oil Corporation for 3 years as independent director, I know government IOC was making profit of suppose 20,000 crore annually. Government wants Government has got nothing because government cannot trade the shares. It cannot buy or sell. So only income from the PSUs they get is through dividends only. So they always press the company to give them dividends, heavy dividends. So always, if you are dividend interested, so always go for the PSUs with having good profits. Only go for PSU banks which are showing profits, because you will be getting very good dividends out of it. What is the strategy to exit when the SIP share is falling continuously for 3 months? Don't worry. Same thing happens to me, but you cannot happen for all the shares, all the sectors. Reason being, all sectors cannot fall. I'll give you my example. My one share, it doesn't rises for 1 year. I started SIP when it was at 24 rupees. I tell you the name of the share also. It was Alok Industry. It went down to 10 rupees. But my daily SIP was never stopped. By anything, I have to generate cash for daily SIP of 3,000 to buy that share on daily basis of Alok Industry. I'm telling you the live example of myself. I get that opportunity to exit that share after 1 year. Now the most profit is showing Alok Industry only. Right now it's in on 31 rupees, and I started investing daily averaging when it was 24. It went down till 10 rupees, but I never stopped my daily averaging. So my average was the best. I started exiting when it comes to 18, because at 18 I was in profits. Now I have got the largest profit from Alog Industry only. Sir, is there any profit of 5% then after exit, whether to buy new share of some other sector? No, you have just think that you have married to that 10 shares. You don't give divorce to that 10 shares. You can add more. You can add 11 share, 12 share, 13 shares. Once you get the profit of 2 lakhs, you can add one more share. If you get another 2 lakh profit, add another share of another sector. But 10 shares, that means you have to buy that share throughout your life. You are married to that. Normal position for profit booking is what range? Facebook shows video clip that many of the investors earn multiple times return when they hold. Sir, in case I can give you the example of Paytm. If one has hold the Paytm and he was in profits, one good day the bad news comes and falls down to more than 50%. What will you do? You have seen the profits, but you have not booked the profits. Just compare this share trading as your jewelry shop. You are doing one business. If somebody has come to buy from you and you are in profits, give it to him. What's the harm? You have taken your cake, you have taken your share, and still after some period, your that share will accumulate it again. So don't be greedy. Never be greedy, and never be fearful of daily averaging. I told you I averaged Alok Industry for more than 1 year. Now it has given me the best returns. So never be greedy. It's a balance between greed and fear only in share market. So never be greedy when you are achieving your profits. Just write down on the table when you are doing share trading on that desk only. What is your exit policy when you are going to book profits? My policy is, if I got enough money for next 15 days to put in my daily SIP, I will wait for another more than 5% of returns or 10% of returns. If I am having just 2-3 days left for my EMI or daily SIP, I'll book profit in 3% only of that share. My daily SIP should not stop, because my daily SIP will be invested in all the sectors. Whereas I will be booking profit in one share only. And my daily SIP will be diversified in all the sectors in equal quantity. Holding is long-term investor. If you are dealing with every sector and you are trading and you are CA and you want to earn more and you don't have to repent when share falls down because of some news, then it's not good. Should we invest equally in all stocks in our portfolio, or better to give different weightages? Amount, you should fix all the shares amount wise and try to select those shares which are near to rupees 100. If you select like shares which are equal to 3000, then even if your share goes to 3500 or 2500, it will buy one share only. So always try to select those shares which are equal to 100 or less than 100 or 100 to 100. So in case of Infosys, it is around 1500, 1600. You will not be, quantity will not be changed by 100 rupees fall or 100 rupees rise. Always try to select those shares which are of lesser amount, like rupees 100, like Steel Authority of India, IOC, GAIL, and Alok Industry. For that matter, you can look for shares of Yes Bank. It was, I started doing SIP when it was 13 rupees, and it goes to 21, then it came back to 14. I exited at 20, 21, now again 31. I never miss the opportunity of exit. If you don't have an exit plan, then you are not going to win it, because your SIP should not stop. What it is, just like in case your SIP will stop for next 3 days, then your stock will be going to NPA. Is as simple as that. 5% on one share, or whole on one share, whole portfolio, you won't get 5% return. You will never get a whole, because there will be some unrealized losses also. Only on realized share, 5% or more in one share only, not whole. You are not going to exit whole portfolio. You will exit that share only which is showing profit of more than 5 or 10%. You will never book losses. So if you want to sell whole portfolio, then you will be booking losses in some shares also. Whichever share is coming in category of more than 5 to 10% profit, exit it. And don't stop SIP of that share also. Never. If you have to book the profit, it will buy again tomorrow also, that day also. Sir, what to do in the market scenario like last week, month, SJVN gone for 100. I have got SJVN for daily SIP in my account. I started when it was 32, 33. I still have money to invest for next 10 days. What to do? No, not 10 days. Any money you want to invest. Suppose you want to invest 1 lakh rupees in one share. Just divide by 50. It comes out to be 2000. Put 2000 daily SIP of that share. Don't invest in one go. If you want to invest in one go and you want to invest more than 5 lakh, then invest through hedging of options. I'll tell you that also. If you want to invest more, like more than 5 lakhs in one share, then you should enter first in option, keep that money idle. If that option show you loss, then enter in that share. Otherwise, simply, if you want to invest 1 lakh rupees in one share, just divide by 50 and put daily SIP. You will never be in losses. Another question is, sector cyclic operations is require any technical economical indicator, sir? This is pure scientific. You are playing mathematics. It's nothing to do with technicals. I never follow technicals. Technical people must be saying, hold on for Paytm. And one bad news, where are the technicals now? This is simple strategy, pure mathematics. Buy daily, sell when it's showing profit. It's better than any business, like jewelry business. Jewelry shop owner will sell his jewelry at loss also, but you have to sell your shares only in profits. So what to do for algo trading? This is what I have told you. This is like semi-algo kind of thing. Semi-algo means your entry is automatic, but your exit is manual. How to select the best 10 shares we have to put in? Just write sectors, and against that sectors, write shares which you like, and never miss any sector. And don't put two shares in one sector unless you have covered all the sectors. Sir, in your early slide, suggestion of Yes Bank was given. Is Yes Bank good now because it has seen bad phase for 5 years? I already told you 80% of your portfolio should be large cap and 20% should be like Malika Sherawat song. So Yes Bank comes into that category. Out of 6 songs, one song is of Malika Sherawat, item song. So Yes Bank is like a item song. You have to select 20% जो नाचने वाला भी हो, which gives good volatility, which rises, falls very fast, and give you good opportunity to exit also at very soon. So you can select 20% of your portfolio for mid cap and small cap also. And Yes Bank comes in that category. Alok Industry comes in that category. Suzlon comes in that category. If shares buy for 10 days and after 12 days it shows 7% profit, sell off all shares or 50%. It depends upon you how much cash is left with you. In case you are having cash for investment in another for 1 month, you can sell 50% of holding. Otherwise, normally I do sell 70% of my holding of that share if it's showing more than 5% of profit. I exit 70% of my holding of that shares. Then another day it rises, then another day I'll sell 70% of 70%. What about Bandhan Bank? Should I exit? If in case it is giving profit, definitely you should exit and put daily SIP of it. In another few days, you will having the same quantity. What you have booked the profit. How to start SIP in Demat account? You go to your broker, ask him how to put SIP. Like every bank broker is giving this facility. When you place the order, you see it is shown while placing the order whether you want to buy one time or buy through the SIP, or even bankers are offering now loans for buying the shares also. Only you have to put in 30% of your money, 70% is funded by bank and at very nominal rates of interest on daily basis. Even 8 to 9% they charge. But don't buy shares on loan. I suggest buy little quantity and through SIP only. Sir, please also let us know if, sir, I have bought share Piccadilly Agro at the rate. Now it is 332, but expecting it to 1000. This kind of decision is okay. Never go for rumors. Always, if you are getting profit, book at least 50% of your profit and put another that profit in another share or SIP of that share only. आप ये सोचो जो आपसे खरीद रहा है वो भी तो कमाने के लिए खरीद रहा है ना. आपने सारी कमाई करनी है तो हाउ इट विल बी गो. आपसे अगर 332 में कोई खरीद रहा है तो वो भी तो इसी एक्सपेक्टेशन में खरीद रहा है कि इट विल गो एंड आई विल सेल. I should take my cake and get out and place the sip of it or sip of another share. No, but do large cap shares come in the bracket of 100 to 200 as they are mostly expensive? No, most of the shares you just it's very simple to find out which are 100 or 200. Go for Nifty or ex Nifty shares and you will find many shares in the range of 100 to 100, even less than 100 also. When this gets split, their share is lower. So like sale is around 130 now, but earlier it was less than 100. Same with IOC, same with GAIL, same with Coal India, same with BPCL, same with BHEL. Which share may be held for long term? In case you want to invest in long term, go for mutual funds. Don't go for shares. Shares are more risky, so you should exit when you are getting good profits. Fundamental versus technical versus option data, which to rely on? Only on pure methods and what your heart says. Fundamental is better. I don't prefer technical. Technical, I don't. मेरे को understand होता ही नहीं है what is technical. Technical is nothing but giving you picture of the past data, and past data doesn't reflect. It can be future. Technical is just reflection and making things made from the past data only. Heavy loss in Bandhan Bank, 350 buying price, so hold or sell. Heavy loss. If it's in loss, don't sell it, but start SIP in it and your average will come down very soon. And then when your average is more, your price is more than your average, exit it. And but buy in small quantity on daily basis. In such case, every day you are selling the same share and purchasing the same share, but the quantity is different. I'm buying only 3,000 worth of shares, but selling same share of more than lakh rupees or 60,000, because I have accumulated that share for last 15 days. That I am selling it. So your question is, in such case, every day you are selling the same share and purchasing the. I'm not doing day trading. I'm selling the a big chunk of share of that share, but buying very less quantity of that share. So let's not discuss stock specific queries. We should love to hear a future. If in any one sector all money which reserved are invested but still not showing any profit, what to do after 9? Do keep investing in that share. I already told you I have invested for more than 1 year in alog industry. Don't stop even that is not showing profit in 90 days. As per your strategy, we have to buy on daily basis even when the earlier purchase reach the high target. There is no profit target. You don't know what is the target. What is the point in selling and buying the same share in a day? You are buying very less quantity, but you are selling big quantity because you are selling the accumulation of 20 days, but you are buying for 1 day only. Even in a day, there is so much variation in the price of share. Then what time of day you should buy? If you are getting profit, that time is the best time. Stock option versus index option, which to trade at low risk. I prefer index option. Always go for the Nifty index because it is a collection of 50 shares. And to move 50 shares, it's very difficult. Don't go for stock options. It's very risky and it is very easy to manipulate also. But index option is very difficult to operate because Nifty is consisting of 50 shares and it is very difficult to move that Nifty. Let's move on to now option trading now, I suppose. Nowadays brokerage is too less. It's just 0.1%. You just have to pay 10 rupees per SIP. How do you set the SIP in demat account for the same share? You ask your broker, he will give you the facility, coming sectors to invest. Now, even our institute has started allowed to do F&O for CS. So we should say, we should start our hands in F&O also. Some people come to me and tell कि यार F&O में मैंने पैसा लगाया था and I lost too much. So I simply tell to them कि in case you have exactly done the opposite what you have done for loss, तो आपको उतना ही प्रॉफिट होता. वो बोलते हैं यार you are right, but कोई देखता नहीं है because in most of the times future and options our losses are more, but our profits are, we are exit very early in profits. Now one more question: can we start SIP with index options instead of sector wise? Not index options, because in index options there is a factor of time decay also. In shares there is no time decay. So how to, if you buy index options, the time lesser, the index option prices will fall down. So no SIP in index options, only in shares. Now, never, when you start the option trading, you should have the clear, like in equity, you have to have the clear entry and exit plan also, which you should write in front of you and follow that strategy. Whatever make you study. Sir, made profit of 50%. That's great. If you can't wait results, paper trading, you can do paper trading before. But most of the brokers now have also giving the facility of backtesting your strategies. Like there is one stockmark.in, or even brokers are giving you your strategies to backtest. Like if you have done that strategy and you want to backtest for 1 year, 2 year, and you can get the result on daily basis also. So always go for option trading. First, backtest your strategy, whatever you want to do. I'll tell you two, three of my strategies also in option trading, which you can try. So always first backtest your strategy and then put it in real life. Option trading was introduced in 2001 for with the intention of hedging tool. Like if you buy a car, you have to take the insurance, and insurance is just like an option trading. Buying an insurance is buying an option. Selling of insurance is like insurance companies. They are selling it. They are selling, shorting the option. It is, you can compare option if you are clear in mind, just like in insurance of your thing, underlying asset. In case of insurance company, underlying asset is car. In case of option, it is equity or future underlying asset. So option trading is was introduced for the hedging only. Like you can hedge your, in case you are in export business, you can hedge your currency trading with options. You can hedge, but nowadays people don't buy the underlying asset. They do only option trading as an individual thing. They buy, sell it, and don't use it as a hedge. I told you it's just like a vehicle and it is an insurance. Like in insurance, if you buy a vehicle of 10 lakh rupees, you have to pay 10,000 of insurance. And for next 1 year, your insurance company will insure you for 10 lakh rupees. Same is case here with option trading also. But in uh, share trading, option trading, we have got two things, call and put. Put means when you market falls, you get the profits. But in just like insurance companies, when you get loss or you get accidented with your car, the insurance company will pay you the money of your insured amount. But in case of share market, there is call also. Wherever when you get higher the gain in your equity or anything, even then you earn by buying a call option. Whereas in insurance company, there is no thing like call. Only it just like it acts like a put. But in future options, you have got both ways, both hedge. You can buy a call also. In case market rises, you get the profit if you are a buyer of call. And if you buy a put, in case of falling market, you get an, when you are a buyer of put, then you earn from that. In case of insurance of a car, it is one way only. Whereas in option, it is both ways. And there is, everybody must be knowing the knowledge of at the money, out of the money, in the money. At the money is where the share is trading, that strike price is at the money. Out of the money, in case share is trading at 100 rupees and option strike price is 100, then it is at the money. And 110 rupees for call, it is out of the money. For put, it is in the money. And in the money is for call of 100 rupees share is 90 is in the money, and 90 rupees for put is out of the money. I'll not explain much of it. I suppose you all must be knowing about uh, in the money, at the money, out of the money. Now there are more questions coming up. Uh, is selling an option is better? It depends. I never sell a option. I am always an option buyer. But I do with this strategy. How to exit from NCL holding which never listed, so demat also not done. Also to exit from companies which are not in trading. Never go for penny stocks. I already told you 80% of your portfolio should be large cap and 20% should be small cap or mid cap only. Which strategy to implement based on VIX or index? Depends. In case you are a buyer, if VIX is low, you are a buyer of options. In VIX is high, then you can sell your option. Should we subscribe to IPOs? Depends. It is, you get all hardly 15,000, 20,000 worth of shares in case you apply IPO, good IPOs. They are so oversubscribed, you get much amount. You guess just get 10, 15,000 worth rupees of your IPO. So IPO is another thing. You can go for it. I was into future and options now. There are many strategies in future and options. What I do, I tell you, a we all humans, they don't have uh, स्टॉप लॉस का कोई थिंग नहीं होती. लाइक आई ऑल्सो डोंट पुट स्टॉप लॉस, एंड उसकी वजह से यू कैन गो टू बिग लॉसेस ऑल्सो. टू ओवरकम स्टॉप लॉस, व्हाट आई हैव डिजाइन द स्ट्रेटेजी is I always do pair trading. I tell you other things also. I always go for pair trading. Never do option trading naked. Don't even never buy a call or sell a call on naked basis. Only on one thing. Always do pair trading. That is the only solution for to overcome your losses, stop losses. Like if you are buying a call, sell the call also of different strike price. If you are buying a put, sell the put also, or buy both call and put. You are inbuilding stop loss into it. So your losses will be very limited. Even your profit will also be limited, but your losses will be very limited. So always I prefer do pair trading in option trading. Never go for naked, because losses will be huge, and then you will start losing a lot of money, and you will curse option trading and future option trading. Another question, sir, what is the best time for option trading? When market is open, all is the best time. There's nothing. From 9:15 to 3:30 is the best time for option trading. Now even NSE is considering to extend their option trading from 6 to 9 also in the evening. Instead of sector-wise stock SIP, can we go for Nifty Bs or Bank Bs? Your exit will be very slow, because Nifty consists of 50 shares, and 5% return you will get after a very long time. So I don't give preference to go for Nifty Bs or Bank Bs. Nifty Bs or Bank Bs can be used for option trading, not for daily SIP, because in Nifty volatility is too low. Matlab, you can say 1% is changing of like 21,000 is right now, around 22,000 is the Nifty rate. So for 1%, Nifty has to move 200 points, and for 1%. And for exit of 5%, the Nifty should move at least 1,000 points. So your exit will be too late. So don't put Nifty Bs or Bank Bs on SIP basis. Only equity, which in a day it can rise for 5% or 10% or fall 5 or 10%. Like in Paytm, it continuously got 2-day lower circuit, 20%. Sir, is physical settlement mandatory for option buyer if in the money position remain after the expiry, or yes? Either clear it before the expiry date. Otherwise, you have to pay the difference. Now, what I was telling, always do pair trading for option in case you want to be successful and be a long-term option player. A small strategy, what I tell, just try it for another 2-3 days, but uh, do it with little quantity and just see the results. And then I am telling you option buying strategy. Like uh, before close of the day, like 3:15 or 3:20, around 3:20 or 3:15, whatever Nifty rate is there, buy call and put of same strike price of where Nifty is moving, right? At 3:20 or 3:15, whatever time. And for that, I have made Excel also. I will show you that Excel also. Yeah, I note down closing prices of the pair of call and put of the closing rates of Nifty. And I just show you closing rates of Nifty. I share my Excel to you. Then you will understand much better. This is Excel. Please see, all people, when the market closes, they close down their shop and start thinking next day or doing something else. But I do some homework after the market closes. I write down the pair total, call and put both total after the day end. Like I am writing for all the expiries, weekly expiries of Nifty, like 11th March, 11th May 23 expiry. The Wednesday total of next Thursday expiry was 220. Call and put, you can say 110 each. Call rate and 110 put rate. And next day, the uh, closing rate for Thursday was 180, and on Friday it was 176. On Monday it was 138. On Tuesday it was 120, and Wednesday it must be holiday. So I write down all the days total. How much your time decay will affect the total of call and put, and this is the lowest day total of different strike prices. This may not be the same strike price what Wednesday is showing, and this may be different strike price, because in case Nifty has moved 100 points, this may be of different strike price. So what I am telling you, the strategy, just go, these are the rates which you are getting at the end of the day, around 315 or 320. You just buy this pair, call and put, and next day before 11 you exit that pair, even if it is showing loss or even if it is showing profit. You have to play for the night only. Maximum loss next day till 11 will be 10 points only. This 10 18 will be maximum 210 till 11 in the next morning. So but it can be to 400 also, in case market opens 100 points up or 100 points down. This 200 will be 300, and you will be having lot many profits. Maximum loss is 10 points only. Next day at 11. Option trading should be done in stock or index. Only in index. This Excel, what I'm showing you, is of uh, Nifty. Call put, sum of call put of the closing date. Of that, these are the expiry dates, what I'm showing you. And these are the day and rates of call and put both pair together. I have given very simple strategy. Just try with one lot of call and one lot of put. Matlab 220 means multiplied by 50. So your investment will be around 220 into 50. It will be around 11,000 rupees, right? In case you deal with one pair of one call and one put. So 11,000 you invest. Next day, maximum loss will be only 10 points till 11 in the morning. 10 means 10, maximum 500 loss. But profit can be more than 10,000, can be more than 15,000, unlimited profit you can get. Video hanging. Ma'am, is it clear? My voice is clear?
Yes, clear, and it's not hanging.
Okay. Sonipat hanging. Option trading should be done in stock or index. It should be done in only index, because to move index, you need a lot of money. To move index of 100 points, you need at least 1,000 crore of rupees for a day to move index for 100 points. So it's very difficult to move index. You have to buy a chunk amount of Reliance or HDFC to move index. So always go for index, option trading in index. I've told you very simple strategy. Enter at 3:15 in the evening, exit before 11 in the next morning. Maximum loss is 500. and maximum profit is unlimited. And one more strategy I tell you will be of covered calls. Like I show you in this. Like sale was closing rate was 133 rupees yesterday, and expiry is 29th of February. Like right, and premium for call of 29th February of strike price of 135. It's 5.9. If you sell this call, you have to sell this call only if you have got 8,000 worth rupees of sale in your kitty. Otherwise, never sell the naked call. It will be very dangerous. Only you can sell the call if you have got same underlying asset also. If you have got not 8,000, even if you have got 7,000 worth shares of sale, only then you can afford to sell the call. Otherwise, never sell the call naked. If you got 8,000 worth rupees of sale, like you were saying, in case I don't get the opportunity to exit, and your quantity is increasing by daily average, and it is equivalent to your lot size, then you start selling call of that share above the average rate of your share. So, like in this example, you have started buying sale, but you never get the opportunity to get out, and quantity has been too much. Now you can start selling call of more than average of that share of the coming week, and already 1 week has passed out in February. Even then, the premium is 5.9 rupees per lot. So you will be getting 47,200 by selling the call. And there will be three scenarios. In case 29th February, your share is rate is right now it's 133, and share rate is 125 on 29th February. Then your profit will be 47,000 from call. And in case your share rate remains there only, like it was 133, it remains at 135 only. Even then, your profit will be 47,000 rupees. In case share rises to 145, then the loss in call will be just 32,000, and gain will be in equity will be 96,000. So your net profit of option with will be too much. 96,000 minus 32,000. It will be too much. Just it will be 63,000 profit. So here covered calls you can play when you have got equal amount of shares in your kitty. Like some people were asking, I have got enough shares, I want to exit or not. If you don't want to book the profit, start selling its call. When call shows you loss, only then you sell those shares. Otherwise, you play with writing the calls and getting the profits every month for around 3 to 4% every month. Uh, One question: what strike price of the Nifty go for round day and out of day different price? These are different. You should go near to Nifty. Like Nifty is moving around 21,700. You should buy call and put of 21,700 only. Where you should put equal amount invested in call and put. So in case there is a rise in the market next day or fall in the market, you should not have much of losses. One should cover the other thing. And you have already inbuilt the losses. Sir, I noticed if I buy call of Bank Nifty 45,000 and close itne, then consider average value of 3 instead of difference of 80, I will get 15 or 20 only less. You don't have to buy only call of 45,000. You have to buy put also of 45,000. Whatever the strike price you choose, you buy call and put both. You don't have to do naked trading, because in case of you are buying only call, it will be give you profit only next day it rises. In case of fall, your call will show you loss. So you have to buy both call and put. So don't do naked trading. Which strike price to select for option selling? Option selling. I'm telling you strategy for option buying, not selling. Why you want to sell? There is unlimited loss on selling and very limited profit. Very limited profit. Madam, seven. It's approaching 7:30. Shall we open for more question and answers, or shall I continue and tell you more strategies? Another speaker must be waiting.
Yeah, so you can continue and conclude.
So we can go for
Yeah, we've been taking
I can
questions
take
simultaneously. Yeah.
more questions and answers, and I can answer them because I must not take his time also.
Yeah. So how many slides are left for yours?
No, I've got enough. I can speak for another 1 hour. That's not the issue.
Uh, okay, sir.
Let's wait for some questions. Let people get clarified what I've told them. In
Yeah.
case they want any clarification, let's go for another 5-10 minutes for questions.
Yes. Okay.
That will be fair enough.
Fair enough, sir.
Should we sell or buy the option on pair trading? I prefer to go for buying, but it's your sweet will if you want to sell it. In covered call, we sell. Yeah, we covered call. In covered call, we sell because we have got underlying asset already in our hand. We have already invested 10 lakh rupees by buying 8,000 quantity. And that's why we are selling the call. It is already held. We have got one stock in hand. In case it falls down, our call will give the profit. In case it rises, it will give our equity will give the profit. It is already pair trading because you have bought the equity and selling the call. You cannot sell it is naked trading. It is pair trading then. Same. One more strategy is there in case of put. Like somebody was asking, I want if he wants to buy a bulk share, like he wants to invest in 5 to 10 lakhs, equivalent to 10 lakh rupees. Suppose he want to buy 10 lakh worth rupees of sale, but he's not sure whether the share will go up or down. So what he should do before he buys 8,000 quantity in shares of sale, he should write the put. The day put shows the loss, he should buy that sale of 8,000. He should have 10 lakh rupees in his demat account, and he should not buy his share until his put shows the loss. You start selling the puts every month. The day put show you loss, that is the day when you should buy the sale. It will always be lesser than 133. Right now, price is 133, right? And you want to invest 10 lakh rupees in Steel Authority of India sale. So you should not buy because you don't know whether it will go down or up. So you should start selling the puts. Once your put will show the loss, the day it will show you loss, that is the time to buy the sale of 8,000 quantity. There is few more questions. Sir, whether pair trading on ITM is okay? Not ITM, because then next day your Nifty should move bigger amount, bigger movement should be there to get you gain. Your pair should be the lowest total. That is only at the money. Sir, buying and selling both the option, whether it will not limit the profit also. If first we have to secure our capital, we should restrict our losses. Profit to automatically come. First we have to ensure our capital. So always buying and selling is always good, because in any case, even if you are selling it or buying it, we don't wait for so much profit. We exit at very quickly. So it is always better to buy and sell. What should be the strategy in case of gap up and gap down? Exit before 11. If you have entered in 315 or 320 and you are getting double the profit, next day, exit. You should not greed. You should control your greed. First, fix up the amount of profit you want to take to home. And that should be the final. No more flexibility with that. Whatever you fix, 20% profit, 30% profit, 10% profit, but you should stick to that profit. You should not be greedy after that. Can you send Excel sheet for cash strategy discussed? It is very simple. Nothing. My this Excel contains all other things also. It is very simple. Just see share price of in your portfolio and sell the call of more than that average price. Only if you have got lot size equivalent to your share. Please explain covered put in detail. Suppose I want to buy sale at 133 and 8,000 quantity, and it is worth 10 lakh rupees, right? But I don't want to invest because it may fall. So instead of buying a sale, I will sell the put of 130 strike price, and current rate is 2.5, right? 2.5 into 8,000 is 20,000 same day I will get in my kitty, in my account, same day. And I have and I have got 10 lakh rupees in my account. Be sure. मतलब कल को ये ना हो कि मेरे पास तो 10 लाख थे ही नहीं, मैंने पुट सेल कर दी. You should have 10 lakh rupees. Only then you can afford to sell put. Otherwise, don't try this strategy. You will get 20,000 rupees. Now, share falls to 125 rupees. Your loss in a put will be 20,000. But अगर आपने 133 में खरीदा होता and share falls to 125, your loss in buying that share will be 64,000, which you saved by not buying it. So net profit is 44. And you can, the day put shows you loss, like in 125 case, put has shown me the loss of 20,000 rupees. I will buy the share at 125 rupees, which is far more at the current price. I will be saving at least 44,000 of rupees buying at lower quantity. This is simple example. Option sale, which strike price to choose, and for hedging, which strike price to buy. Option sale. Always buy in the money and sell at the money, or buy at the money, sell out of the money. You should have a better thing. Like you should buy in the money call and sell at the money call, or buy in the money put, sell at the money put. If Nifty is at 70, then can sell itne put and buy. No, it should be other way around. You should buy 2100, 500 put and sell 2100, 300 sell. Just opposite this. You should buy 21,500 put and sell 21,300 put. Always sell in the money, or better thing, oh sorry, buy in the money or at the money and sell out the money or at the money. Sir, can we do this pairing at different strike price? Different. You can do it. You can try it and let me know the results. But more profit will be when you do at the money. There are n numbers of combinations. You can make million number of combinations with pair trading. So you can try all the combinations. Even you can best all your combination what you are thinking of and try. Whichever is giving is the best profit, you should go for it. So you should not stick to one pair only, what I have told you. There are n number of combinations you can make with the pair. So there are so many different strike prices, so many different expiries. Calendar spread is there. You can buy this month, this week strike price, sell next week strike price same. So there are n number of strategies you can make, n million. You can backtest your strategy, then put it into life. I've just told you one of the strategies. You have 2, 3 year put strategy or covered call strategy. You can make n number, malab, million strategy you can make, and whatever suits you, go for it. Ma'am, 7:35.
Yes, so we can stop taking, I think, questions now.
We have to buy next week's expiry on Thursday in pair trading, or yeah, coming week weekly expiry you should buy. I told you I have given you pair of all the days strike price. Just look at it. These are the pair total at the end of the day on each different days: Wednesday, Thursday, Friday, Saturday, Monday, Thursday, Wednesday, and last Thursday it is equal to 3 rupees, 5 rupees, 15 rupees.
Okay. I think we are on time, sir. Now, um, we done with most of the questions. So, I would like to thank you, Sanjay sir, for your insights and your realistic examples. And I'm sure the attendees will, take the benefit out of it. Thank you so much, sir, again.
Thanks. Thank you for bearing me for 1.5 years.
Thank you, sir. Now, moving ahead, with utmost pleasure, I present our second distinguished speaker, Mr. Giriraj Bank, a seasoned chartered accountant who brings over 2 decades of professional expertise to the financial landscape. Having obtained his qualification in 2001, his extensive post qualification journey reflects a rich tapestry of experience spanning 22 years. Noteworthy among his contributions is his active involvement in the valuation committee and a pivotal role that he played in orchestrating various seminars, which underscores his commitment in professional development. He specializes in the spectrum of services ranging from advisory in equity and other financial instruments, fundraising, income tax advisory service, GST advisory service, to corporate law. Mr. Bang epitomizes proficiency and versatility in navigating complex financial landscapes. Let us all join our hands together to welcome CA Giriraj Bang. Over to you, sir.
Thank you, Neha, for the wonderful introduction. At the outset, I would like to thank Mr. Charanjot Singh Ji Nanda, our chairman, and Mr. Kota S. Srinivas Ji, and Mr. Samandeep Ji for providing me the wonderful opportunity to share my knowledge, whatever I have. I'm glad to hear, sir. We are starting, and I'm sharing my limited knowledge, whatever I have gathered during my journey of share market. I'm sharing my PPT here. Our today's topic is equity analysis and sectorial analysis. So today we will be starting focusing on sectorial analysis, and we have chosen the sector energy sector. We have all heard about the Paris Agreement, and let us see some details about the Paris Agreement. What was the intent behind that agreement? This Paris Agreement was adopted by 196 countries. Idea was to reduce the gas emission and to maintain the climate change. Paris Agreement is legally binding international treaty for all of us. So what was the aspect of Paris Agreement? Let us see that. by 2070. So today we are at 2024. By 2070, we had committed to make India a net zero for carbon emission. So as I told you earlier, that this is the legally binding treaty for all the countries. So we have to abide by this agreement, this treaty. Second, we have to reduce the carbon intensity to less than 45% by 2030. So we all step by step progressive things are shared here. How we can achieve net zero carbon emission by 2070. So by 2030, carbon intensity we have to reduce to less than 45%. By 2030, we have to meet 50% of energy requirement from renewable energy. At present, we are to my best knowledge, we are having renewable energy, or we are using renewable energy to the extent of 15 to 20%. And we have to bring this 20-30% to 50% by 2030. Non-fossil energy will reach 500 gigawatt by 2030. So after 6 years down the line, we have to reach renewable energy. Non-fossil energy, basically renewable energy, clean energy. We have to reach clean energy by to 500 gigawatt by 2030, and which should be 50% of total energy. So basically, total energy by 2030 will grow to 1,000 gigawatt. At present, uh, at 2023-24, total energy of India is 400 gigawatt only. So from 400 gigawatt, we have to travel to the 1,000 gigawatt by 2030. And in that, we have to achieve 500 gigawatt of clean energy. Currently, we are having clean energy of say 80 gigawatt only. So from 80 gigawatt, we have to reach 500 gigawatt. So there is huge demand which will be coming by 2030. And for that, we have some schemes also launched to develop solar and hydrogen value chain. This is again one step towards the green energy. Ethanol blending program. We used to hear many times on the TV channels, business channels, that ethanol blend about the ethanol blending. So towards that, only 20% blending in petrol and 5% in diesel is the target set. Biogas blending obligations in natural gas mandatory from financial year 2026. So in natural gas, we will be blending biogas, which is biogas is again a clean energy, green energy. So when we say green energy, these are energy, basically renewable energies. These energies will not exhaust, and it is a climate friendly energy. And some schemes is introduced Pradhan Mantri Suryodaya Yojana. Under that, assistance will be given for installation of solar panel for 1 crore houses. 300 units of free electricity per month will be given to households. So we can say that how much demand will be coming in the journey from today till 2030 in the energy sector. These are some projects. It's already underway. Adani Energy already have invested in this project. This is Khavda Renewable Energy Park. This is world's largest salt desert in Kutch. This is bordering Pakistan. Salt desert, as big as Singapore. 726 square kilometer and 30 gigawatt renewable energy would be generated from this plant. And this will help 1.8 crores household. And the beneficiary would be Adani Energy, because Adani Energy have invested hugely in this renewable energy park. So we can see that the demand has been created by this agreement, by this treaty, and we are complying with that treaty. And in compliance of that, these we are companies are coming forward for investment in renewable energy. Then this is next project is transmission line. For energy to travel to the consumer, we need a transmission line. Today we have transmission line about 400 gigawatts only. And as energy demand will be high in coming days, we will require more and more transmission lines so that energies can travel easily, seamlessly to the consumers. So there are investment required would be 2.4 lakh crores for the renewable source of energy. For the setting up these transmission lines, this investment would be required. So again, here also beneficiary is Adani Energy Limited and Power Grid. These are the two major players. Power Grid is the largest major player in transmission lines. And this is the investment plan by 2030. And this is again one step to move towards the renewable energy, green energy. Oil exploration and production. Here we will be investing 8.5 lakhs crore. Ethanol blended plants, 35,000 crores. These are all investment companies would be making towards the green energy. Many companies have already started investments. Many plants for renewable energies and even oil explorations are underway. Refining and petrochemicals, 2.7 lakh crores investment. Renewable energies, 2.5 lakh crores investment. Hydrogen plant, 20,000 crores investment. New gas infrastructure that include pipelines, storage, terminals, etc. That would require 6 lakhs crore of investment. So much of investments these electricity generation companies, transmission companies would be making to achieve the goal of clean energy or energy surplus India. So let us look at the type of energy currently we have. So we would say we can bifurcate energies into two. One is traditional energy and another is renewable energy, which we can say green energy or new energy. So traditional energy is completely based on natural resources like coal, oil, gas, etc. So with the help of these resources, we get the traditional energies which we call thermal energy also. So let us assume I have read somewhere that for next 45 to 50 years, we have the reserves of coal, oil, and gases. And assuming we don't shift to the renewable energies, one day, 50 years down the line, there will be no reservoir of coal, oil, and gas. And without that, there would be no electricity, no energies can be generated. So this is the time, correct time that we have given a thought to look for some alternate energies, renewable energy. Coal, gas, oil, these reserves are natural resources. These cannot be replenished in the same speed in which these are consumed. So it takes a lot of years and years to get coal produced. So it's almost impossible to replenish these coal, oil, and gas reservoirs, which are natural resources. So our intention is to use less and less energies based on coal, gas, and use more and more energy which is based on renewables. Renewable energies means their resources would not be exhaust. That will be replenished every day. Another negative point of these thermal energy is carbon emission. And this is the major target that our government and all countries intend to reduce the carbon emission. And by 2070, they all intend to make the carbon emission to bring it to zero level. So this thermal energy is not environmental friendly. This energy is also expensive. Why it is expensive? As we told, it is based on the natural resources. Natural resources are limited, and whenever there is limitations on resources, raw material, obviously the cost tend to increase. Against that, we are coming to the renewable energy. This is the completely new energy which India has taken path to work on. This energy is basically called solar energy, and this solar energy uses sunlight to produce the electricity. The next energy is wind energy. This uses the wind. Then the hydro energy. This uses the flow of water to produce the energy. And next is biomass. Biomass is basically grass, plants, and uh, these are grass, plants, and by using those things, we produce some energy. And these all energies are environmental friendly, and we can see that resources like sunlight, wind, water, biomass are available in plenty, and these are renewable also. These will not exhaust. Every day we get sunlight, every day we get water, every day we get wind. So using these resources, we can generate energies at a cheaper rate, economical rate, which will be environmental friendly. And this way we can move towards renewable energy as directed by energy policy of Government of India. And what are the advantages of renewable energies? While using thermal energy, as these raw materials which are coal or natural resources are limited, so obviously there was a deficit in energy generation. Now, in the case of green energy, we do not have any limitations of the raw material. We have plenty of raw material, and we can generate energies day and night. And this way, this will be our journey to become energy exporter, energy surplus from the present situation of energy deficit. This energy will be economically available, will reach to the masses, and this is a multi-decade growth story. In India, we can produce this energy day and night because we will be using sun, solar for the sunlight and wind. Now there we have observed for the rising demand, and below are the reasons for rising demand. One is rising population in India. We hear every day that populations are rising, and we can see with the rise in population, there will be demand for the electricity. More consumptions would happen. Earlier, and even in today's situation also, electricity did not reach to each and every home. With the all efforts of the government in last year, probably we have heard that electricity have reached to the every individuals of India. Okay, so maybe before 2 3 years, and electricity were not reaching to all the households in India. So when electricity lines are reaching more and more household, obviously they will get the electricity, and therefore consumption would be increased accordingly. Then there is infrastructures development, like railway. Like railway earlier were running on coal, then that was running on partially electric lines. Now the railway has been electrified completely. So with the 100% electrification of railway, energy consumption would rise. Earlier, vehicles were running on old energies like petrol or diesel. Now, electricity-based vehicle, e-vehicles have come into play, and these vehicles will be using electricity only to run. Then there is corporate capex, means there are corporates that will be investing huge in the productions, and all the productions capacity would require energy. Without electricity, without energy, productions cannot happen. Per capita electricity consumption is low in India as compared to most of the other countries. And this also signals that there would be rise in per capita consumptions, and that would increase the demand. By 2050, we have target for renewable energy consumptions to bring it to 68%, which is currently 22%. So this will again give rise to the demand of electricity. At present, total capacity in India is 416 gigawatt. With clean energy, which we call renewable energy, is 43%. Captive captive installed capacity means electricity. This is the capacity installed in some of the industries for their captive use, not for sale. So these 79 gigawatt of energy are also installed, and out of these 9% is only clean energy. So on an average, we can say 30% of the energy is the clean energy out of total installed capacity. So from current 416 gigawatt, we have to reach 1000 gigawatt of production to meet the increasing demand. And in this 1000 gigawatt of production, 500 gigawatt of production should be clean energy only, strictly as per the international treaty and as per the government lines. This will reduce the carbon by less than 45%. And next is, all these require huge investment, and our energy player in India are already making, and they have promised to make investment towards this sector. Now, how value chain works in the energy sector? One is electricity production or generation. So there are a few companies. Their work of those companies are to produce or generate the energy. Then second line is transmission of energies. So there are companies that lay down the infrastructure of electric grid. Through those grid lines, power gets transmitted to the consumer. So currently, these transmission lines installed with the capacity of 416 gigawatt means 416 gigawatt of energy can be transformed from one place to another place to these power transmission lines that we call power grid, electric grid. And third level of companies are electricity distribution companies. These companies distribute energies to the consumer. And who are the largest producer of energy? So let us see NTPC. This is a government company established in 1975. This company has 17% share in India's total production. Total installed capacity is 72,254 megawatt, out of which 7,000 megawatt is the renewable energy. So means this company NTPC is having 9% or producing 9% of renewable energy only. Okay, and from this 9% energy, that is 7 gigawatt, they have planned to rise this capacity from 7 gigawatt to 60 gigawatt by 2032. And they have target, NTPC's target to increase the capacity from overall capacity from 72 gigawatt to 120 gigawatt by 2032. Next big company is Tata Power. Tata Power has installed capacity of 13,061 megawatt, and that has renewable energy of 32%. So if we compare with the NTPC, Tata Power has much low production of electricity, but renewable portion is more, as 32% is more as compared to NTPC, which has 9% of production only of capacity. Then third company comes is JSW Energy. JSW Energy has installed capacity of 4559 megawatt. This has 3158 megawatt thermal, which is traditional energy, and 1391 megawatt hydropower, which is a clean energy. As we can see, NTPC has the target to increase the capacity from 72 gigawatt to 120 gigawatt. So we can understand how much demand or how much investment this NTPC has planned to make in the next 5 to 6 years. Similar to NTPC or in line with NTPC, all other companies have started making investment and to increase their installed capacity of power generation. Then comes to Torrent Power that has installed capacity of 3879 megawatt. Reliance Power has capacity of 6000 megawatt. SJVN, this is incorporated in 88 as a government owned company. It has capacity of 1912 hydropower. This is a clean energy. 97 megawatt wind energy. This is also clean, and 6.9 megawatt solar. So SJVN company has 100% clean energy only, though it has a lesser production capacity, but all capacity is a clean energy. The next company is CESC. This has installed capacity of 1125 megawatt. This company is also into transmission of electricity apart from generation. Then let us come to Adani Energy. These are the largest transmission company. In previous slides, we have discussed about the energy producers. Now we are discussing about the energy companies which will help transmission of those energies to the consumer's doorstep. Then here comes the Adani Energy Solutions Limited. So this company has installed capacity of 18,795 circuit kilometer transmission lines and with 40,000 1 megawatt power transformation potential. So this 18,795 circuit kilometer can transform power of 40,000 megawatt. And target of Adani Energy is to achieve 30,000 circuit kilometer by 2026. So basically in 2 years, they have to increase their capacity from 18,000 circuit kilometer to 30,000 circuit kilometer. So we can assume that there are now only 2 years left and they have aimed to achieve 30,000 circuit kilometers. So already they have started investment in this line to achieve these targets. Revenue mix of Adani is 31% from tower power transmission and 62% from power distribution. So Adani Energy has two work. One is power transmission and next work is power distribution. From many of us, we see the bills of Adani Power that is coming to our home. So basically, Adani is the company that is distributing these electricity to us. So next company is Power Grid. This is a government-owned company installed in 89, established incorporated in 89. This has installed capacity of 1,64,511 circuit kilometer transmission line. So if we compare with the Adani Energy, which has 18,000 circuit kilometer, Power Grid has 1,64,000 circuit kilometer. So it's a big company in power transmission line. And these lines can transform power of 367 gigawatt, which is the full capacity or 90% of the current production capacity of India. Now we are looking to the individuals company. What is the current status of these companies? This is the NTPC. So we have discussed in earlier slide that NTPC is the largest power manufacturing company in India with 17% share. So we here try to mention about the key financials of the NTPC from 21, 22, 23 and 9-month year ended 24. Sales, we can say it is risen from 1,11,000 to 1,32,000 to 172 and 130 in 9-month period. So every year sales is rising. PAT is in 23, PAT is 17,000 crores. So we can see how much value these companies are generating. Every year they are generating PAT profit in crores of rupees. Say 50, in 21, 15,000 crores. 22, 17,000 crores. 23, 17,000 crores. And in 24, it is the same line. One thing is common in the energy sector, that energy sector is in huge demand. Okay, so supply is less, demand is more. We have seen early in our earlier slides that demand is more and demand is rising with every passes time. And these companies are almost, these are few companies and almost in the monopolistic kind of situations. This is monopoly sector, we can say, because demand is rising, players are few, and entry barrier is huge, because these are infrastructure sector require huge investments to come into play. So there is huge entry barrier. So in a situation where monopolistic situations are there for this is a monopolistic business, entry barrier are huge, so there is no competition in the market, demand is rising. This makes the entire sector a huge profitable and investable. Debtors, you will see in 21 it was 28,000, in 22 it was 28,000, and 23 also 28,000. In number of days, we can say debtor cycle have been reduced from 92 days to 60 days. So in 21, the company used to get its collection in 92 days. In 23, the company is getting collection in 60 days. So it is a better situation for the company. In 60 days, it gets its payment. Now, who are buyer of these power? Buyers are again companies, oil marketing companies, and all oil marketing. Most of the oil marketing companies are belongs to government only. All our blue chip companies belongs to government, create huge value for the country. So there is no scope for bad debt for these electricity generation companies. Now, equity, we can say it is 1,53,000 crores. And against this equity, company has raised a debt of 2,22,000 crores. With this, debt equity ratio is 1.4 times, which is under control, under acceptable level. Return on equity is 12%. PE ratio. So this is the multiple which the market is giving to this company, and this currently the market is giving 16 times of earning. So whatever company is earning, multiply by 16 is the current value of shares. So if we see the 3 years average multiple is 9. So company used to get 3-year average is 9, 5-year average is 8.5. So now market has started giving 16 multiplier, which is much higher than 9 and 8 and previous averages. So probably with the scenario of high demand in the future, market has started giving these multiples. Price to book ratio is 2 times. So the whole company is available at just 2 times of the book value. So we can say company is available at a reasonably cheap price even after it has grown or it has market prices have risen in the recent 1 year. Still it is available, it is attractive. So next company is Tata Power. Tata Power again, as we see, this is the same in line with NTPC. It is a power production company only, but it is not this as big as NTPC. So it has a sales of 55,000 in 23. So sales is rising from 32,000 to 42 to 55. So sales is rising with a good pace, indicates high demand in the power sector. PAT is 1439 in 22, it is 2156 in 23, 3817. Debtors here in March 21, debtors were 58 days cycle. In 22, it is 51 days. So again, improving debtor cycle is improving. In 23, it is 46 days. So company has improved in debtors days collections from 58 to 46. So whenever we are looking at any company, we should look sales and debtors together, because there may be a high sales company may be showing with no collections. So that should alert us that company is making sales but collection is not happening. So there may be some issues in that company. So in these power generation companies, we are seeing that companies are generating sales with the better or improving data cycle. They are improving collection cycle. So in Tata Power, equity is 30,000 crores. So 30,000 crores are investment. Debt is 52,000 crores. So debt equity ratio is 1.74 times of equity. So again, this is also a acceptable level. And as we have seen discussed earlier, this is the heavy investment sector. Infrastructure sector require huge investment. Return on equity is 12%. Now see the multiples. Market is giving this Tata Power multiples 36 times. So valuation of Tata Power, which is 36 times, and NTPC is 16 times. So Tata Power is getting much more valuation multiples as compared to NTPC. Average multiples 3 years was 30, 5 years was 24. And price to books is 4 times of book value. So 36 times earning, 4 times book value. It's a high value market is giving to the Tata Power. And what about NTPC? 16 times multiple as compared to 36, and 2 times price to book. Just available at 2 times as against 4 times that Tata Power is getting. So here we have discussed the two companies, NTPC and Tata Power. Both are two largest power producer. Now next we will be discussing Power Grid. This is the power transmission company. This is we have discussed in earlier slide. This is largest company in India for power transmission, and second largest company for transmission is Adani Power, Adani Energy. So let us look at the Power Grid financials, key financials. Sales is 39,000 crores, 21, 22, 41,000 crores, 23, 46,000 crores. So sales is rising, indication of increased demand. Now PAT is 12,000 crores. 22 में 16,000 crores, and March 23 it is 15,000 crores. So PAT percentage for these transmission companies 30%, 40%, and 34% in 23. So on an average, we can say 35% is the PAT for transmission sector. And what is PAT for power producer? Power producer PAT is on an average 5 to 6%. NTPC's PAT is average 12%. Tata Power it is 6%. And as compared to both producers company, transmission has the huge PAT of 35%. This makes the really attractive for the investment. Now debtors have risen in this company from 79 days in 21 to 81 days in 22 to 104 days in 23. That means company is selling, company is increasing their volumes but unable to get the collections. We should look into the reasons for increased number of days of collection in Power Grid. So in Power Grid, equity investment is 87,000 crores. Against that, company has taken debt of 1,20,000 crores. So this makes debt equity ratio is 1.38 times. Again, this is under control. Return on equity and capital employed both are great, 19.60%. As we have seen, PAT is also good. So return on equity is good. So P current trailing P is 16 times. So market is given 16 times multiple, and against average 3 years average or 5 years average of 10. So we can say that company has risen in the past 1 year from 10 multiples to 16 multiples. Still, it looks attractive. Price to book is 2.92. So basically 3 times of book value is the share market price of this company. Now next transmission company is Adani Energy Solutions Limited. So Adani Energy Solutions Company Limited has two services. One is transmission lines, and second is the electricity distribution line, the electricity distributions to the households. So company has set up transmission lines. We have discussed in the earlier slide. Now this is the financial performance. Sales is 9,000, 10,000 crores, 11,000 crores, 13,000 crores. PAT also runs in crores. 1,290, 1,236, 1,281. PAT average ratio is 10%. Debtor cycle is remains the same in all the 3 years on an average 38 days of collection. Now in Adani Energies, let us look at the valuation. Equity investment is 11,897 crores, and that company has taken debt of 36,000 crores, which is 3 times its equity. So this we can say company has taken the huge debt in this sector. In other companies, we have seen like Power Grid company has debt equity ratio of 1.38 only. So company has taken debt of 1.38 times, whereas Adani Energy has taken debt of 3 times of its equity. Return on equity is 11%, whereas in Power Grid it is 19%. So it is performing poorly as compared to the Power Grid, its peer. Still, it's getting multiples of 101 of its earning, whereas Power Grid is getting multiple of 16 times. Despite of all these best numbers, it is getting multiples of only 16, and Adani is getting multiples of 101. This makes the company very expensive. And historically also, market used to give high return, high multiples of 133 3 years average, 77 is the 5-year average, and price to books is 10 times. And in the case of Power Grid, it is 3 times. And in the case of Adani, it is market is given valuation of 10 times of its book value. Now this is the valuation. So we have discussed two companies in power generation, two companies in power transmission. So here is the comparison of valuations, and in this we can see that NTPC is the biggest company in terms of investment, which is government company. Second, Power Grid is the biggest company in terms of investment. This is also a government company. Tata Power and Adani has very low investments. Okay, so as far as debt equity ratio is, NTPC and Tata Power and Power Grid all have low debt equity ratio. Company has taken lower debt, and Adani has taken the huge debt. Return on equity is high. NTPC, Tata Power both are making return on equity 12%. Adani is also making return on equity 12%. Power Grid is making huge return on equity is 19.60%. So valuation is concerned, Adani is getting high value of 101 despite the poor number as compared to its peers, Power Grid. And Power Grid is getting multiples of only 16. Similarly, NTPC is getting 16 multiples despite best number as compared to its peer Tata Power, which is getting 36 multiples. So we can say the government company is having low valuation as compared to the private sector companies. And this new government policy have removed the fear of giving low valuation to the PSUs, which is NTPC or Power Grid. Now there is less and less interference from the government. and all tariff setting or price setting have been left to the market on dynamic basis. Now the sector valuation. So one is energy sector. We are comparing valuation which the market is giving to this sector, and next is the market is giving valuations to the uh, broader market. We can say Nifty 50. This is broader market. So energy sector is underrepresented. So weight of energy sector in Nifty 50 is very low. Valuation is very reasonable. We have seen the valuation in earlier slide. See the valuation of 16 times of PE, 2 times of book value. These all valuations, despite the biggest number of 1,53,000 kind of investment. So valuation is very low as compared to its broader market. And reason for lower valuation is addressed with the policy reform in traditional energy segment that we have been discussing for past half an hour, 1 hour. Now multiples is 15 times to the power sector as company, and this is 37% discount to the Nifty 50. So whatever market giving multiples to the Nifty 50 and market is giving multiples to this energy sector, this is 37% discount, and price to book is 2.3 times. So this is also at 2.3 times of books is 24% discount at Nifty 50. So market is giving 24% in terms of price to book more to the Nifty 50, 37% of valuation higher to Nifty 50 as compared to its power sector. Whereas return on equity, this is the real efficiency ratio. We can say if we have invested in the company 100 rupees, what rupees we are getting. So we are getting return on equity in this sector is 14.5%. This we have seen in the earlier slides. And this return on equity in this energy sector is 20% higher as compared to broader market. So return on equity is high and valuation is low. Okay. So when we compare the sector, energy sector valuation and broader market sector valuation, energy sector valuations efficiency is more, earning is high, return on equity is high, but valuation is at discount. 37% in terms of price multiple, 24% discount in terms of price to book value. Next connected sector is oil and gas. In oil and gas, if we see the value that there are upstream, which we say oil exploration and production. So there are some companies which are into oil exploration and production. They produce the oil. So here in India, ONGC is the largest oil producing company, oil and gas producing company. So one company is producing oil. See, next is integrated refining and marketing company. So these companies purchase the crude oil from the market, refine that crude oil, make productions of petroleum products, then sell it. So these type of companies are there in the market, and here example is IOCL. We will discuss later about ONGC and IOCL. In the top 5 companies in India by revenue, and by profit. ONGC and IOCL is among the top 5 companies, both by revenue generation or by profit generation. So India's top 5 companies, these are the best companies in India, and valuations are very cheap, available very economically. Then there are few companies that are only on refining. So they buy the they take the crude oil, they refine and send it back, only doing the work of refining. Then there are next line is petrochemicals company. So again from the oil and gas companies derive the chemicals and petrochemicals from this crude oil. Crude oil or gas is the raw material for these petrochemicals and chemicals. Then there are lubricants and oil field service that is also generated from the oil only. So these all are derivatives from the oil and gas. So what is the position in India? So here we have discussed about the oil, and next is gas. In gas again there are gas production company that produce the gas. Then there is gas transmission company. So gas, how the gas will reach to the industries, to the consumers. So there needs to be a transmission lines. There has to be some terminals. There has to be a city gas distribution system. So all these transmissions distribution systems are there, and this adds value to the gas sector. So this is the status of oil and gas in India, and oil and gas is also part of energy sector only. India is the third largest consumer of crude oil. Okay, so let's understand, we are third largest consumer of crude oil after USA and China. So USA and China is before us, they are the biggest consumer. So third number is ours, India, and largest consumer of gas also. Okay, so these are the biggest raw material for us, crude oil and gas. We are the largest consumer. Now the problem is we import 85% of crude oil. When we met 85% of import of crude oil and 45% of import of gas, that means we are paying huge amount in forex exchange to these companies for procurement of these gas and oil, and the big amount of forex goes outside India. So this makes us very important for India to understand how we should be able to reduce our consumption level, reduce our imports, and reduce our forex exchange payment. Over the year, India has developed processing capacity to produce the petroleum products, and these products India again export to the countries and generate the forex revenue for the India. So to some extent, this set off the import bill of forex. So why we are heavily dependent on the import? Let us see that. We are depending on the import because we are not having adequate petroleum reserve in India. So we have to produce petroleum products. To produce petroleum products, we need raw material, which is oil and gas. Okay, so India doesn't have enough reserve of petroleum. To make petroleum product available, India import crude oil, gases, and produce the petroleum products which is required for the country. Now we are moving towards the renewable energies. So by using the crude oil and the gases, we are producing the thermal energy. Now we are moving towards the renewable energy such as solar, wind, hydro, biomass, etc. And once we develop this energy, we will be reducing our energy. As we progress the development of renewable energy, we will be reducing our dependence on petroleum product. And once we are over the year, as per our production plan, as per our treaty, once we achieve the huge productions of renewable energy, our petroleum product consumption would come down and significantly, and import bill, and correspondingly we need to petroleum production consumption will come down, and accordingly import bill also. We will not be required to import the oil and gas because we will be shifting to the renewable energy. Now, India crude oil production is 29 MMT, million metric ton. Natural gas production is 34 billion cubic meters. Okay. And ONGC is the only one company that contributes 71% of India's oil and gas production. So whatever we need for India, 85% of the product, 85% of the requirement we import, and 15% we produce. And in production also, we have only one company, which is ONGC, that contributes 71%. So we can see that only producer in India is ONGC. So it has a huge demand. So this ONGC comes among the top 5 companies by revenue and PAT. In India, in top 5 companies, top 5 Indian companies by revenue and profit, both ONGC comes among the top 5. Major producer of oil and gas. It sells its product to oil marketing companies, and those companies produce petroleum products and sell to the consumers. And this company is into major is oil and then natural gas, and there is some value added products which are very few. So challenges before the ONGC is its sale price, because it is directly realization of its product directly linked with the Brent crude prices in the market, and this Brent crude is the global commodity. So it has a limitation. So, and it gains when the Brent crude price is more, and it loses when the prices is low. In that situation, the company will not be able to realize more in terms of oil and gas. So let us look at the financial performance of ONGC. Its sales is 3 lakh crores, 5 lakh crores, then 6 lakh crores. See the numbers. It is among top 5, 6 lakh crores. PAT is 33,000 crores. Debtors, as the company is selling its production, its output to the oil marketing companies, which are again government owned companies only. So there is very low risk in terms of debtors realization, and company is improving, shown improvement in debtors collection cycle from 19 days to 14 days to 11 days in 23. So with the great sales, great profit, good collections, and economical cheap valuations makes this company a investable company. So company has own equity. In equity investment is 3,09,000 crores. Against that, company has taken debt of 1,43,000 crores only. So debt is much low as compared to equity, which makes the company very much comfortable. Return on equity is good, 14%. In at in any given scenario, with any comparisons to any company, return on equity 14% is considered a good number, good percentage. So 14% return on equity with equity of 3 lakh crores, with sales of 6 lakh crores, this makes a huge value additions. So this company add 33,000 crores every year to its reserve. 33,000 crores every year to its reserve. And valuation wise, this company is available at the cheap rate. So average 3 years multiples is 5. That is again cheaper. 5-year average is 5.68. So trailing company's current multiple 7 is above its historic average. So and price to book is available at the book price only 1.09. So company, such a big company is available at the book price only. Now next, the biggest company is IOCL, Indian Oil Company Limited. So what this company does? This is the leading company in oil refining and marketing. This is doing refining, this is doing transportation, this is marketing of all petroleum products like gas, oil, diesel, petrol. So it is a complete integrated company. It is producing, refining is basically a producing of petroleum products, then it's selling those petroleum products. It has a transportation pipelines also. Now let us move towards consumption. This is million barrel per day. So we have discussed in earlier slide that India is the third largest consumer of oil and gas. Okay. So here is the data. USA is consuming 20.53 billion barrel per day. China is consuming 14.01 million barrel per day. India is consuming 4.92 million barrel per day. So this shows or indicate the opportunity for the demand and growth in this sector. So what are the challenges the IOCL may face? Again, raw material is the crude oil and gas, and this is again the global commodity. This prices of crude oil depends on many factors globally. It is not in control of anybody. So if the crude oil prices increases, its cost of production of petroleum product increases accordingly. And this may impact the demand of the final product in the country. And this may impact its realization. If the company does not increase the prices, it will have a low realization. If we increase the prices, it will have a low demand. So prices of Brent crude oil affect directly to its realizing power for its product. What is best scenario? It has a huge demand. There is no problem of demand. Demand is rising every day. So demand is not the problem. Crude oil is the only challenge. And by revenue and PAT profit, this company also falls among the top five companies, top five Indian companies. This is again into monopolistic business. There is hardly any competition apart from few companies. Let us see the numbers. Look at the numbers. March 21, 3,63,000 crore sales. 22, 5,90,000 crore sales. And 23, it is 8,42,000 crore sales. This sales is among the top five Indian companies sales. In PET also 21,000, 25,000 crores, 11,000 crores. And these 9 months data, company has generated PET of 38,000 crores. Look at the numbers. PET 38,000 crores in the 9 months. So this is the money company have added to its reserve. And this money company adds every year to its reserve. 38,000 crores. So by sales and PAT, company is among the top five India's company. PAT margin seems low, and average we can see PAT margins would be around 7% only. 6 to 7% is the fair margins, fair PAT margins. As discussed, there is huge demand. Company is selling its product, petroleum product to the consumer. Collections days are 14 days in 21, 12 days in 22, and in 23 it is just 7 days. So we can say out of sales of 8,42,000 crores, company has collected almost all its money. Just 7 days is only outstanding. So collection is also a very efficient. There is no scope for any bad debt despite this huge sales. So let us see the investments and valuation. In investment, company has invested in terms of equity 1,67,000 crores. Such a big number. Company has taken debt of 1,15,000 crore, which is just 0.69 times of equity. So it is less than its equity. Very much comfortable position. Return on equity is 7%. This looks little on lower side. Price to equity ratio. Such a big company that add 38,000 crores every year to its reserve. The company which is among the top five Indian companies gets valuation of just 5 times its earning. So company is available at very cheap rate. Historically also, company used to get its multiples around 5 only. Price to book is 1.4 times. So company is available at 1.4 times of book value. So just above its book value, company is available. So we can say, looking at the numbers, looking at the demand, looking at the monopolistic situation of the company, looking at the realization, looking at the changed government's policy, this company is available at a dirt cheap price. We should consider this company for investment. Now, we have discussed in oil and gas. One is oil producing companies, ONGC. Next is IOCL, Indian Oil Company, which is distribute on refinery and marketing of petroleum products. And third type of company is GAIL Limited. This is into gas. So in India, which company produce the gas? Largest gas producer is the ONGC. What is the role of gas? GAIL Limited. GAIL Limited buy gas, natural gas from ONGC, or its import the gas, then transmit the gas through pipelines to all the consumers. So GAIL have established 11,500 kilometer of natural gas pipeline. So transportation of gas has to happen through GAIL only. GAIL has established such a big infrastructure in India for gas transmission. Like power transmission, there is a power grid company that have established the grid, electric grid. For gas transmission, GAIL has established the pipeline. 2,300 kilometers of LPG pipelines have been installed. 6 LPG gas processing units company have. Company have also petrochemical facility, and this is the market leader in a sector with high entry barrier. No other GAIL can be created because it requires a huge investment to create such a big infrastructure. So almost impossible for any other company to create such a big infrastructure. This makes the company a monopoly company in the sector. Now, how the company is generating revenue? It is from trading or marketing of natural gas. 76% of revenue comes from that. Remaining 25% from other products. So 5% from 7% from petrochemicals, natural gas transmission 7%, LPG 5%, and other negligible. So maximum revenue mix is 76% from trading and marketing of natural gas, and is procuring gas from ONGC and importing. And let us look at the financial numbers of GAL. Look at the sales, 5792, 1,45,000. This indicates the high demand for its product. PAT 6,000 crores, 12,000 crores, 6,000 crores. In 23, we should look for the reasons for decrease in PAT despite high sales revenue. This is point to further dig in the company. Now, debtors collection is on an average 25 days, which is okay. 3,500 to 7,000 crores to 10,000 crores. So with the increase in sales, debtors numbers have increased, but debtors collection days remains the same. On an average, it is 25 days. So this is the monopoly company, high entry barriers, huge demand for its product, high sales, high investment, low debt. company is available at a multiples of 14 times. What is investment in the company? Equity is 73,000 crores. Against that, company has taken debt of just 18,000 crores, which is just 0.25 times only. So company at any point of time can pay this debt. So in this such a high investment company, that is negligible, or we can say it's almost debt free company. Return on equity of 9% looks little on lower side. Price earning multiple is 14 times, which is double the historic average of 7 or 8. So this indicate that company has run in the last 1 year and doubled in the last 1 year. Prices have doubled. Price to book is just available at 1.56 times of book value. So despite the company has run in the recent 1 year, it is available still at attractive rates. Looking at the new scenario. So with this, we are ending our presentation. Hello, organizer is available?
Yes, sir.
Yes, ma'am, you are available.
Yes, sir.
Yeah. So I have completed my sectorial analysis, and I think time is up.
Hmm. Yeah.
We
Okay.
can wind it. Yeah, we can conclude here only.
We have a few questions, sir. Would you like to take it?
Yes, yes, ma'am.
Okay. Someone has asked, what does transmission company mean? Those who lay transmission lines, and who are their customers?
Transmission company means the company that lay the infrastructure of transmitting the electric product like electricity or gases. How the gas will reach to your home, how the electricity will reach to the consumer. To reach the electricity or gas, we need transmission companies that lay down all the infrastructure. Through those lines, these product travels and reach to the industries or the consumer.
Okay. The next question that we have, sir, is could you please share top two, three players in electricity distribution category and how they will get benefited in the renewable plan 2030?
We have discussed the biggest producer and distribution companies, and at present the biggest distributor in listed space is Adani.
Okay. The next question we have is what are moving to renewable energy? It will affect the oil. We are
Sorry.
moving to renewable energy. Will it affect the oil industry? I mean,
Yes, yes. When we will be moving to the renewable energy, that means we are basically reducing our dependence on oil. Why we are procuring oil? We are procuring oil to produce the uh, petroleum products. And why we need petroleum products? And in lieu of in to replace the petroleum products, we are moving towards the renewable energy. So if we produce more and more renewable energies, we will be requiring less and less petroleum products and oil.
the next question that we have is why is the price of natural gas coming down recently?
This is this prices of gas is a factor of market dynamics and production. So if there is how we are producing gas, we are producing gas through the we are exploring gas or producing gas through the uh, like the we dig for through drilling, or there is some wells we dig, and we don't know how whether how much quantity we will get from the well. So it's all depends on the production available in the well production generation, not only in India, in the globe. So gas is the global commodity. So if the production is less means if the supply is less or if the demand is high, then there will be high price of gas and vice versa. And if the production is high and there is no demand, there will be low prices of the gas available. Oil and gas both are global commodity, and prices of these commodity affects globally.
Okay. Okay, we'll take this final question. All sector energy transmission, oil and gas need infra push. So there are any infra companies who can manage this infra demand?
NTPC, if you look at the financials of NTPC, Adani, Power Grid, we have discussed about all the biggest companies in this our presentation, and all these companies are making huge investment to achieve the target by 2030. I think we have discussed in our slide a few projects also where Adani have already invested for the production of 30 gigawatt of renewable energy in the area which is equivalent to Singapore. So company have already started making huge investments, and these are all mentioned in the financials of these companies.
Sir, people are asking for the PPTs if they can get it.
I can share PPT with you, no problem. You send me the email or what's mobile number where I can share. You can in turn give to your viewers.
Okay. So that is it. Thank you so much, sir, for your insights on the sectorial analysis and the companies that you shared with us. That was really insightful. So, as we draw the curtain on the enlightening webinar on equity trading, I'm really filled with a sense of gratitude and inspiration. Today we've had the privilege of delving into the depths of knowledge and expertise shared by our distinguished chairman and our esteemed speakers. So their insights and learnings have undoubtedly enriched our understanding and opened new horizons in the realm of market trading strategies. I would also like to express our thank to each and every participant, as your engagement and thoughtful questions have added depth and diversity to our discussion. It is through such collaborative efforts that we can continue to foster, a community of learning and growth. So thanks once again to everyone involved in making this webinar a resounding success.